Okie dokie, I can see the green circle of ray and sunshine and life and hope going around, and that means we're now live on YouTube, which is awesome. That's where we like to be, of course. G'day everyone, and welcome to a brand new, day. I suppose it is a brand new day of trading, and a real day of trading. I'll put it that way, because yesterday was kind of not a day of trading, and a day that I don't trade when there's markets closed left, right and center. The US was open, of course, and I've got to say that pretty much as expected, we didn't do a whole lot of traveling in terms of pips gained, pips lost, etc. There was a little bit of movement on a few different pairs, but I stayed out of the market as much as I possibly. In fact, I stayed out of the market. A little bit of management to be done with some trades that I'm in, but that was it for me. Today's another day though, and I'm looking forward to finding some new opportunities in the market, as well as, I expect to probably close out a few positions today because I have tightened my stops up quite substantially. We'll have a look at the pound in a minute. Pound went through TP2 overnight, or this morning actually, my time. So those of you who went into the pound US dollar trade with us last Wednesday, I think it was, should have taken your second lot of profit on that today. That's good news. And there are plenty more things to look at today. Of course, one of them would be the FTSE. Now it's reopened, or it's about to reopen in about 2.5 minutes. What are we looking for, Ash?
Yes, we are. Yeah, we're at this stage probably looking for a little bit of a push higher. We are. Let me just get in the room with you guys as well. We are just coming off the back of some half decent reports out of China. I don't know if you saw that, mate, but
Mate, I didn't.
Pretty good trade balance. Well, certainly better than expected trade balance anyway. Let me just come in the room. There we go. It's coming in the room just so you guys can respond to me.
Hello, everyone, by the way. PL, John, Helen.
Yes,
Fab,
good morning.
Senka. I think I've got everyone there at the moment.
Good morning. Okay. Right, yeah, let's have a look. Let's have a look. Let's get to this. I just want to show you the charts so we can see what's going on here. Get this one out of the way. Get that one out of the way. Now, somebody was asking me about RSI the other day as well, which I wouldn't mind giving you guys a little bit of insight into.
That's a condition, right? You get it from typing too much. Is that right?
Where are we? Gosh.
G'day, Kevin. Are you able to share screen? Or
I am, mate. I am.
Screen.
Yeah,
okay,
I am.
Cool.
Sorry. Yeah, I'm just being really slow. Do you know what? I've been working. I've been up since 6 this morning working, and I don't know why, but I'm a bit delayed on this part of it. But yeah, I am now showing the screen. So here we are. FTSE 100 continues to climb. We did have a little bit of a test of this area from around about 7 o'clock car time. So around about an hour ago, we had a little bit of a test of this area. So it's a bit under stress here, a little bit under pressure. If we bring this onto some short-term timeframes, would fully understand it's actually coming down early on this morning, because look at this 15. The 15 has just beaten, and we talked about the fact that all time frames have market structure, and this is the structural point really on the 15. Now, it doesn't mean we're going to trade it, because it would be against our longer term time frames, but it wouldn't be too much of a surprise to see a little bit of weakness coming here early doors. What I'd like to see, if we are going to see some weakness in this market, I'd like to see it over a longer period. So I'd like to see really the hourly show us the way, and that means that this same area pretty much, I would say, needs to be broken down over a longer period. So maybe the first hour does end up coming down, maybe it even closes down at the daily pivot. And if it does come down to the daily pivot, then as it comes back up again, then we can think about some downside. But you can see that this, as I say, the structure here on the 15 has been broken. So not a huge surprise to see a little bit of selling pressure coming in early doors. And I wouldn't be surprised at all, as I say, to see some longer term selling pressure, mate. I've got to say, because the thing is, the earnings season is coming up, and I think there's a little bit of blind flying going on. Now, we had some pretty good numbers out of China. Comparatively, and I'll show you those before we get to the pound trade, and I will be brief as we do this little bit of a roundup here. So where we at? Where we at? Where have I got this? There we go. These are the numbers out of China. 19.9 billion denominated US dollar denominated trade balance. Slightly better than forecast, but this is the real one. The trade balance, yes, it is a red number, but still, it's out of negative territory. So the trade balance came in, I think, better than previous. Now, for some reason, they've been reported better than expected, but the forecast was actually slightly better than this. I'm not sure if it's been skewed or not. So that has actually allowed the Asian markets to be fairly buoyed so far this morning. But you can see that the FTSE 100 is under a little bit of stress now, and I suspect that stress is probably coming in just because of the potential that the earnings season, which is as I say, about to kick off. With I think some of the banks are going to be reporting fairly soon, and people are going to be flying blind. So, people are going to be starting to think, okay, let's pull out of some of these positions in some of the banks and some of the financials, or should we stick with it? But certainly as the market opens up this morning, we are under stress. Coming down to the daily pivot would actually amount to quite a big dip from the high, and that would be 120 pips from the upper range here. But you can see that when we talked yesterday about market structure, this would be the upper end of the hourly structure, and there's the lower end of structure. Could argue that there's some up here as well. So maybe watch out for that. But we can certainly see that the 15 is providing some heaviness to this market right now. So does it hold at this point? Yet to be seen. So let's see how it progresses, mate. We're coming right the way down to 5780 or 5800, which is where the daily pivot still kind of puts us in the uptrend, and we might just have a little bit of possibly a little bit of profit taking going on here as we meander around and decide what's the longer term position for the market. Now, obviously, if we break down this level and we break down the daily pivot, that would be enough of a signal for me to suggest that we are actually starting maybe a leg to the downside. But for right now, we just got a short-term push going on. A little bit of noise, I guess, in the market early doors, but looks fairly significant, I have to say, mate, so far. We're already kind of down nearly 1% on the first push to the downside. Let's see if the market can actually hoik itself back up again and see what the confidence is out there. I'm just going to tell you before I pass to you what the barometers are telling us. When we're looking under the hood here, we have currently got actually not too bad numbers going on right now. They're at about 60% of stocks, maybe even 65% of stocks are in positive territory. Some standout names to the downside are some of the travel stocks. So Carnival floating back to the downside again. But looking to the upside, the outperformers currently are AstraZeneca, so pharmaceuticals, and also international consolidated hotels, which I find the international consolidated airlines, which is British Airways. So I'm not sure why that's going where it's going. But gold stocks also doing pretty well. Polymetal, an absolute complete standout stock, still really pushing to the upside. And we see gold 1770 right now, so gold's still pretty popular, a commodity right now. But that's where we're at.
Captain James Arthur Cook, we didn't discover Australia. He landed in Australia. No, was that 1787, 1770? First fleet in Australia, maybe. I don't know. My memory's not that great, but that's an historic date or time. Yeah, the one I'm looking for.
Yeah,
for Australia, mate, 1770, and it's a beautiful place. If you Google 1770 and have a look at the pictures, what a magnificent place that is on the north coast of Australia. Anyway, I digress. I should be placing a pound trade, yeah.
Yes, let's go with that. So right now we're just a little bit on hold, mate. Going to wait for a bit more of the picture to unfold, but it looks a little bit negative and a bit heavy today. So buying probably isn't the right option.
Tell you what, if this next leg that we're we're looking for goes down, and it goes down from here, it's going to be a heck of a trade if we can get in.
Yes, it will. Yes, it will.
All right, you guys should now have my screen, which is showing you the pound US dollar 1 hour chart. And that line you see on my charts is, in fact, the take 2 profit line on pound US dollar on that trade that we took on Wednesday or Thursday. I'm not sure you can see my screen. Can you see my screen?
Yeah.
Okay.
Yeah, we have got the pound dollar, yeah, with a market order in.
All right, happy days.
Order window, yeah.
So these are the parameters for the first of our OCO trades. One cancels the other, for those of you who don't know what OCO means. We're trading the range of the last 3 1 hour bars prior to London Open, which are that one, and that one. So the range is the high of that bar and the low of that bar. What we now do is place a long order 15 pips above the high of the range, and we put our stop loss 10 pips below the low of the range. That today equates to 1.2589 for the long entry rather, and the stop loss is at 1.2526. Now, before you press go on this, guys, if you're trading it, once again, I must give you a bit of a disclaimer. This is a beta test, not a system or a strategy that we are endorsing at this point in time. So please bear that in mind if you are looking to follow these trades. They are very much in beta test mode. So there's the long order in place. There's where the stop loss is. The entry is up here somewhere. Let me put a line on that. Should be around about there somewhere, 1.2589, I think I said, which is bang on where we are there. Hang on a sec. Just let me get rid of that. What on earth? Oh, I'm just moving the... What am I doing? That's the other trade. Sorry, guys. I'll just let that do what it wants to do and come back to it. So we need to place an alternate order, the stop order, the sell stop order. And this is how we go about that. So we do exactly the same in reverse. We call that a sell stop. And we use the stop loss for the long as the entry for the short. And if I'm not mistaken, that was 1.2526, maybe 252 something. Let me just check that. 26. Bingo. And the stop loss will be the entry for the long, which, if my memory serves me correctly, was 1.2589. Okay, there we go. All right, so we've got a buy stop here. Oh, that's what that is, showing me what I want to see. Doesn't normally do that. One day I'll learn how to drive this machine. There is our entry for the long, 1.2589. It's also our stop for the short, and the entry for the short is 1.2526, and of course that is also the stop loss for the long. Now, if we are triggered into this trade, and if we leave it on there long enough, we will be, there's little doubt about that. If we're triggered long into this trade, we need to immediately cancel the short order. And if we are triggered short into the trade, we need to immediately cancel the long order. At that point, we then need to change to a 15-minute chart. Where's the thing I'm looking for? There it is. We need to change to a 15-minute chart. And we then trail 2 buyer or seller bars pursuant to whichever way we get taken into the trade, direction-wise. Let's see how yesterday's would. You've got nothing urgent, Ash? We don't need to come back to you?
I don't, mate. Do you know what? I'm just fascinating, really, that one of the outperforming stocks is a gold stock, and it's gapping up, and it's really off to the races. So,
oh, okay.
Looks like there could be some just a little bit of nervousness going on. You know, why would people be heavily buying gold? And you'd have to sort of think, or gold stocks. You have to think that there's some protection going on here with the markets right now.
Mate, I think there will come a time where all that will become very clear to us. Maybe it's not right now, but I sometimes wish I understood gold more than I do.
Yeah, I know what you mean.
And that's probably the answer that I need to give. It's more relevant than anything else. I'm guessing otherwise at the end of the day. It makes sense to me after it's happened. But
yes.
before it's happened, I think, okay, this logically should be the case. We logically should be in the last, let's say, 3 months, we should be buying gold as much as we possibly can. Yet if you did that, and your stops are in a great place, then happy days. But if you're trying to, do it inside parameters that aren't probably where you should be, which is, the smaller time frames, aka, you can get into a horrible mess with it. Really
well, I have to say, mate, this is why I like gold stocks, because at least with gold stocks, you get a dividend. You obviously don't get anything if you buy physical gold. You just, you get some protection. But as the gold price comes up, you got to figure out where to sell it. Whereas if you buy a gold stock, then ultimately you don't ever have to sell it because they're going to pay you a dividend. And, if the price goes up, then the likelihood is your stock price will go up. And if it comes down, then if you want to kind of decide to liquidate your position, you can. But if you want to keep it on keep it in the market and maybe take some of the profits that you got from dividends to spread things out to more of a risk on area, then that's great too. So I much prefer the kind of stock story rather than the commodity itself. Same with oil, actually. Same with oil. What you're going to get if oil goes up in price, apart from a capital gains.
Mate, the best way to trade oil and gold that I've found in the last few months?
What's that?
Or even 12 months. Well, I don't, but the best way that I reckon to trade it is just subscribe to Ainsley because she seems to nail it.
Oh yeah, no, Ainsley's brilliant at gold. I mean, I haven't seen her oil trades actually. I'm pretty sure you're right on the oil things as well, but I haven't seen I don't follow the oil ones as much as I'm closely following gold. But yeah, she's been spanking gold, isn't she? Out the ballpark. Absolutely. Yeah, some crazy numbers. I think you're right, mate. I think you're right.
That goes to something that, we both hold dear to our hearts at the end of the day, and that is be very good at one thing and you don't need to do another thing.
Absolutely right. Absolutely right. Yeah. If you can get,
she's very good at it. Very, very.
Oh yeah, she's amazing. Yeah, you get comfortable with a market, whether you trade euro dollar, which was really your go-to for quite a while, wasn't it?
Absolutely, yeah.
Maybe still is. But yeah, euro dollar and you get good at that. And gold, that gold stock is absolutely rocketing, mate. 6.5% stronger this morning already. So I'm sure that there's some there's a little bit of
is it a minor,
hangover.
It's a minor.
Yes, they're called Polymetal International, and even Fresnillo, which is another gold stock, they're up 5.5%. So it looks like the pharmaceuticals and the precious metals are absolutely flying this morning so far. I mean, there will be a hangover from the fact that we didn't have any market yesterday and Friday, so there's some significant price movements going on. But I think quite interesting that those two particularly are going extremely well right now.
Absolutely. You know why I can't see the charts? I'm on yesterday's recording. That's interesting. I'm looking at questions. I've seen that question before. It's yesterday's. Now I'm happy. I'm on today. All good. All right. So guys, the pound trade.
Oh yeah. Helen's saying we should get Ainsley on the webinar. Maybe we should. We invite her on for a little chat. That'd be a great idea, Helen.
I don't know if we can afford it, mate. Can we?
Yeah. We're going to think what we can...
Look, I'm sure she'd be only too happy to do that.
Yeah, she would. Yeah.
She's a great lady, so we'll have a chat to her. Absolutely. Maybe not this week, but going into next week may be a good idea. yesterday we decided not to trade the pound, right? So let's just track back and see what that would have produced, if anything. Obviously, we had a little bit of a buying session on the pound. Our last three candles would have been 9 o'clock, 8 and 7. Let me get my little machine.
And when you're ready, mate, Lewis is asking about the pound Aussie as well.
Okay. So there's our range from yesterday. Oh, it doesn't look great, actually. That candle, and that candle. So entry here, entry 15 pips ICO wouldn't have been taken in, I don't think. Let me have a look at that. So the high of that bar is the range, 120, 125.29 becomes 129.30 plus 15 is 125.45. So that's our entry, 125.45, which is up there, about there. And let me just make that a different color. This is getting very congested here. There we go. That's a whole lot better. And we need one of those markers as well. All right, into the 15-minute chart. Let's go to yesterday, not yesteryear. So entry on this bar here, and you then go to 15-minute bars. That one and that one. Stop loss moves to there. We get taken out of a loss. Very small loss, but a loss nonetheless. Yeah, look, ranging markets. This is not a great thing for ranging markets. There's no question about that. So that's probably a good call not to take that trade yesterday, given that we expected that we wouldn't get a whole lot of meaningful movement. And that really was the case, I think. Today is how we've found movement. And you can tell when the market's had a little bit of a snooze and a little bit of a sleep in holiday, AKA. It wakes up. So Asia session today, bang, away she goes. We find the buyers. That makes it difficult for London session, you know, because oftentimes you'll find that if one session moves, the next one doesn't, and vice versa. If the previous session or the session prior to this session doesn't move, then you tend to think, well, I think we're in for a bit of movement here. We shall see. They're just.
Oh, we're definitely on the move, mate. We're definitely on the move. Yeah. I mean, the FTSE, the FTSE is definitely. And I have to say that, you know, when you're done there, I'll just illustrate something to the guys, because there might be a buying opportunity coming up at least.
Mate, do now, because as we all know, I don't trade the first bar of London.
Great, okay.
And the pound trade is sorted, so away you go.
Okay, if you pass me the screen, that'd be great.
Lewis, so did we. We used to have a Tuesday interview session, and to be absolutely frank, I don't know why that ceased. We were getting that from an outside source, right? When I say an outside source, within the company, but we weren't arranging that. We were simply interviewing the interviewee, and that seems to have come to a halt. I think there may have been a little bit of an issue with maybe people wanting. No, I won't say that. That may be true of some, but not others. So at this stage, I don't know, but certainly we can have a chat to Ainsley. Well, that's on the to-do list.
Yes, absolutely is. Right, let's have a look at this FTSE, because look at it. I mean, it's a pretty so far motivated sell-off that we started with the day. But you know, if we're looking at the barometers here, and I'm just going to bring you a couple of things here. So trade balance, we know all about this from China. There's nothing else that's reported today to be announced except for the G7 meetings. I wonder what's going to happen from there. But when we look at the stocks and how they're performing in the FTSE, this is what we got. If we look at this on the percentage change, just to see how many stocks we've got in positive and negative territory here, we're really looking at Carnival are absolutely tanking. This is the one I was talking about, Polymetal, well and truly to the upside. But if we go down here just to see where the line stops, around about 41% are now in positive territory. The rest are looking pretty negative, right the way down, right the way down, right the way down. But it's not a standout sell-off number. You know, the 40% is there's still 40% of stocks clinging on to the upside. So it doesn't suggest that we're going to tank to the downside without any kind of response. And this would suggest that we probably have. Now, if we bring in the structure of what we got with the hourly's, the lower end is here, and maybe there's a little bit of testing that could go on down here as well. Now, looking at the pattern that we probably broke out from, it's probably something like this. So we probably got that going on. So we're edging closer and closer to this 5,800. Now, the reason I like this for a buy area is about sixfold. We've got the 5,800, so it's a round number. So that's one tick. We've got this this breakout of the triangle, whether it's there or not. It's in the zone. You can see the zone there. So that's 2. We have got the daily pivot just here. That's 3. We've got an hourly low as well here, going along here, which has already been tested once and was rejected. So that's 4. So a lot is stacking up in this particular area for a potential buy zone and a pop. We've got the trend line, depending on when this happens. If it comes down by 1 o'clock, so sometime in the afternoon, that's going to make that area even stronger. Or even if it falls through a little bit, it's going to make this area of between 5,800 and 5,780 even stronger. So another reason that potential buy zone is screaming. And then finally, so that's 5, I think. Finally, we got the fib. The fib from the very lowest point where the trend really started to move to the upside, to the highest point of the trend. And obviously, we're going to measure this in a few different ways, and I'll show you the other way that I like to measure it in one moment. But there's a 23% retracement around about that same area. There's this trend here. If we go from the last time we had a proper retracement to go, that leaves us around about the 38% retracement as well. So another reason that we should be getting a bounce around about there. And if we look at this on the weekly fib, so we're going to go from the lowest point of the week, last week that is, to the highest point of last week. And all that really is going to give us is where's the gap there? I think it's there actually. All this is really going to give us is the fact that we would be right to last week's high. So there's 6 or 7 reasons that this area should hold, and if it doesn't, that tells us a lot. So I'm going to watch out around here. Now, really, the first thing we should be thinking is, can we buy? For the trend to be intact and everything to be back to normal, can we buy? Now, if this area doesn't hold, then we should be all over the sell, because there is a lot around here that would have given way. So we can watch this throughout the day. Now, there's nothing I like more than an area of confluence to express an area that we should be doing something in the market. And I think I've illustrated that this area, there is lots and lots of confluence in this area. 6 or 7 points of interest all exist around here. It's somewhere in this zone. I can't say exactly where it is. Pinpoint. We can get fairly close to assuming where it is, but it is somewhere around here. That's the thing we do know. It's somewhere in this zone, and probably we can even tighten it up a little bit more. So what I want to do is see what happens in this zone, because if this zone doesn't hold, then we should be looking for downside. Now, what that means is that we need to see a significant breakdown. So the monthly pivot will do a significant breakdown and hold. So the monthly pivots, if the market comes down here, market comes down here. Let's make this red, and closes down here at some point. Doesn't need to be this particular bar, but if it does that, then as it goes back up again, what we should be thinking is, can this previous buy zone become now a sell zone? and I'd kind of want to see something of a body, I guess, but with some sort of tail would do me, or the tail be, you know, it could be something like that instead, where the tail has kind of provided us the resistance, but the key that it doesn't close back within the area. If it closes back up here again, then, you know, it's kind of like anything sort of like that closes back in that within the trend line and above the daily pivot, I probably would have to wait for more information. But right now, if this can continue down and go back up again, we're selling. If it comes down here and starts to show signs and signals that that it's going to bounce and hold here, then we are buying. And all we'd need to do there, you know, to see, what do we need to see to suggest this is going to be a buy? Well, we're looking at on the hourly chart right now, right? Now the hourly chart is only 25 minutes old. This is the hourly bars are only 25 minutes old. It would be enough to suggest there's going to be a bounce here to get this on a 15-minute chart and see a 15-minute bar reverse. Now it's got to be a significant reversal, you know, right now, and that significant reversal is going to be something of a hammer, an engulfing bar, that, you know, the ones that, you know, effectively the train tracks reversal, anything like that, something like this would have done. You can see that that's pretty much a train tracks reversal there. You know, if we take away the tails there, but this has to look significant. There's got to be significant buying coming back in with the close. So we're waiting for bars to close, but right now we're sitting on our hands because we are right at this point of interest. You know, this is a great place to really analyze what needs to happen here for us to take action, because we are in the take action zone now. So 15-minute bar would be great. The 5-minute time frame probably would need to see something more than just a bar, you know, because, and the reason we need to see more than just a bar is that this is definitely now downtrending. Now let me just have a look at the 15. Is that in a downtrend? Yeah, it kind of is, really, isn't it? Kind of is. That's in a downtrend. So we need to see some floating around down here, which could actually make the case a lot better, because that would mean that later in the day we might, if price is still holding down here, then we might start to see this carve out. The hourly isn't in a downtrend. All the hourly's done is testing the lower end of the structure. So really, we want to be looking at our lower term timeframes to see if we can get any information which suggests a pickup. And if it doesn't appear, that may start to suggest we should be looking for downside. But the safest part to look for downside, as I illustrated, would be a breakdown to start with, break through the important levels that we're waiting to see if they hold. And if they do break down, because the problem is, if you don't wait for the breakdown, you can get badly burnt as you anticipate it breaking down, and all of a sudden it just bounces. So wait for the breakdown, wait for the close, and if it does, as Jeff said earlier, we've got loads of time on this. You know, if this goes back up again, then we got loads of time to kind of get back in anywhere along here, really. You know, we're trying to get in short. We're trying to go down there. But look, when we look at this is an hourly chart, and we're looking at 5,800. So look what we got here when we look at this on longer term time frames. This is where we are. This got that point to get to. That's 400 pips. That point down there is 1,000 pips down. We got loads of room and loads of time to really kind of enjoy waiting for a proper setup. You know, we don't need to do anything here at all but wait. But the great thing is we definitely are in an area of point of interest. Now, yesterday we were talking about how do you get the daily pivot? That is that proprietary, Jeff?
No, no. John, have you got any templates from ATW at all?
Thing is, John's he's probably got the daily wave rider. Has that got I think that's only got weekly else. Pivots. Yeah,
it'll only have a weekly pivot. Oh, what a shame you can't post. Have you got anything other than the daily wave rider, John? If you have, I'll show you when I come back how to do that. If you haven't, I'll try and I don't know, somehow get you the file. It's not a hard thing.
Now look at this as well. So we were talking about this yesterday, the Swiss yen. I think it was Chris was talking about this, and I said, well, great. Well, it's perfect. Same sort of thing that we've got with the Swiss yen as we just had with the FTSE. And look at the Swiss yen now. This is a setup. This is a really good. Let me just check this just to make sure I'm not. We might need to see a bit more information here, actually. Ooh, this isn't quite there, you know. It's not ideal. It looks okay on the face of it, but it's not actually ideal. Let's just see have a look at this on the 15, because the 15 is the problem. This area here on the 15 is the problem. This looks good at this point. Looks like we do have our first lower high, but there's a little bit of an issue. Ooh, I don't know, actually. That might be okay.
Mate, what can you tell me about the yen? I'm a little bit stunned that that Swissy yen sold off. Yesterday?
Yes.
Yeah,
Well,
yesterday.
so with you. Okay, so one thing about the yen, and this is the thing that concerns. There's two things that concern me about the yen. One, that technical pattern isn't quite there. It doesn't look great. That technical pattern, it looks okay, but I think you'd be guessing a little bit. This is what would worry me even more, though. Look at the money supply stock. The M2 money stock year on year, 3.3%. This means there's more yen in circulation. And if we're talking about supply and demand, that means there's quite a lot of supply growing in Japan. And that happened overnight yesterday. So yeah, I agree with you. And actually, we saw the yen strength off the back of that. So that's only one data point, of course. But what will boost the yen? And I guess one thing that could boost the yen, we're seeing the FTSE 100 struggling to hold its gains right now. And if we look at the S&P, then it is I guess maybe you could argue a bit of an area of resistance that may well break down as well. Looks all right, actually, the S&P. And maybe this is the problem with the yen right now. I'm with you. I don't know what the drive would be with the yen. I quite like the Swiss yen when it comes down to the technical pattern. It's okay. There's something slightly askew with it, and it might just be one of those things that you end up missing. I like the fact it's bounced off the daily pivot. I would prefer to see it bounce off the weekly and monthly. That really would set the heart racing. And I wonder whether we might need to wait for that. We're way too close to this trend line now anyway to be interested in trading it. So there's no point in trading this, in my opinion. I'm with you. The money supply isn't a negative story. There's lots of aspects with the yen which don't make it a negative story. I'm not seeing the stock market break down. Yes, we're getting a retracement, but that retracement does provide a buying opportunity. And look, people have started to buy in at this particular point. So this has just provided a bit of a buying opportunity in certainly the FTSE 100 anyway. Not sure about the S&P and the Dow. What the story is there. So I don't know whether the timing's right with the yen. I like it for further upside, I suppose, particularly if people start to look for a bit of safety as we head into earnings season. But that isn't really that it's not laid bare at the minute, is it, mate? And I guess that's the point you're making.
Yeah, look, as far as I'm concerned, they're in a bit of strife. So I just don't get why the yen would rally. Maybe I can put that down to yesterday being a let's call it non-institutional trading day. I'll put it that way. So maybe today's a different story, and it will go back to where where I expected it to go. I was a bull Swissy yen. And I was kind of stunned yesterday when it sold off as it did. Anyway.
Yeah, There was something with the Swissy as well. Actually, they had some money supply data as well, which I'm not sure what's
Did
going
they?
on there.
Right. Okay.
Yes, yeah, and it might be something to do with that. Difficult one, isn't it, Swissy yen? Because they're both kind of safe havens.
Yes,
Considered safe
but
havens anyway.
when you see a weakness in one of them, it's then probably a pretty good time to trade the other way, in my humble opinion.
Yeah, yeah. Question for you, mate. How long should you wait for the London breakout to activate before calling it off? 2 hours?
Oh, look, I'd wait till the next session. Even there's no point in not trading it, because the essential element here is that there will be a breakout of the range, and that's what we're trying to catch. So it really doesn't matter how long you leave that one in my humble opinion. It will happen at some stage. What we're trying to do is catch it and not get caught up in the noise. So that's the issue that this trade has. When we are in consolidation, you can get caught up in the noise, and that's why the entry is 15 pips above on a buy situation and 10 pips below on a sell situation. So we're trying to avoid exactly what we're seeing right now, as a matter of fact, on pound US dollar. A whole lot of junk that's going on, nothing more than that.
Yeah,
but that will end,
Yes, and it is. I mean, that is part of the key of of trading as well. Try and keep yourself away from noise, and the noise is really prevalent on short-term data points, short-term news releases, short-term price point, short-term charts as well. So try and keep yourself away from the noise if you possibly can. Protect yourself with that one. Difficult for you, John, actually, because John's really looking at two guys that are trading. We do trade short term. There's no doubt about it. Jeff and I do look at short term, but we have got a much broader and holistic picture. So we're kind of using a bit of both. But it's difficult for you, John, because what you've done is learn a longer term way to trade, and then you've hopped in with two guys which are effectively freestyling and on some short term timeframes, and it's probably a little bit confusing, and it's difficult for us to get the pace right in this kind of thing in some respects. So I guess apologies for that, for throwing you straight into it, but it's okay. So it's okay to kind of to catch up in your own time as well, and just listen and not have to take trades. And I guess what I'm saying is I would still personally be looking at taking your live trades and your active trades on the Wave Rider or whichever strategy it is you've learned. And if you are interested in following what Jeff and I do, then I would take them as paper trades. So note down what we're doing, and see if you start to understand the patterns rather than trading without understanding. Because the problem if you do that is if you may as well put a robot on. You may as well put a robot on your charts and let them do everything, because if you don't understand what the robot's doing, then you don't know whether it's turning on or off. You just kind of like, he's taking trades or she's taking trades, whichever sex the robot is, whatever gender it is, but that they are basically taking trades without any understanding, and they'll either win or lose. And if it loses, you won't understand why. If it wins, you won't understand why. So I'd say at this particular stage, you can continue to focus on the daily Wave Rider or whichever strategy it is. I think that's great, and just try and pick up some bits and pieces on the way to see if you can improve that particular strategy rather than clogging your head with too much. Right. So sorry, Jeff. Just as well, just a quick message as well. I had a message earlier, and I won't name the person, but a really kind message about helping Jeff and I out with some computer IT stuff, which which is amazing, because Jeff and I aren't very good at that. But just to let you know, we do have the team behind us. What's that?
We're gits.
Yeah. What's that mean? What's that? Is that an anagram or something?
This is in training.
Yes, we are. We do have the team behind us, but and also contractually, I'm obligated. I'm not actually allowed to respond to a message which hasn't come through the ATW system. So I apologise that I won't be able to reply to you direct, but I just want to let you know that got the message, and I really appreciate the offer. It's fantastic. But for right now, we should be okay.
As do I.
As does Jeff. We both really appreciate the offer. But we thought we'd want to make sure that we let you know that we have got the message and we do appreciate it. But I'm not contractually allowed to type it back to you at this stage anyway. But we'll probably be opening it up. We're going to have to open up some communication, aren't we, mate? Because we've got to get these charts in from everybody. We'll have to figure that out.
And as long as that's through the right channels, that's exactly what will happen. Takes a little bit of negotiating, that's all, because we're all on different parts and different time frames and different, sections of the world. Sometimes a message will stay there for 12 hours and, it gets a little bit messy, but we'll get there. We will absolutely get there. I've got a couple of questions there, and I do have to have a look at the 30-minute charts as well, very shortly. Are you good for me to go, mate?
You go ahead, mate. You go ahead. I'm going to watch this FTSE and see if there's an opportunity to get in. No doubt, the enemy wants to buy the FTSE right now. Not the worst trade in the world. A little bit of a lack of clarity. No, let's move away from it so we don't make a silly error, which could happen at this particular point. I think we need to let it unfold just a little bit more.
Okay. I won't look at anything that I'm not willing to trade at the moment. There's one here that I'm interested in, and this goes back to what we're discussing about the CAD. About the yen. The CAD is really, really interesting currency at the moment because it's so closely related to what oil does. And we haven't had a look at oil today, but let's have a quick squeeze and see what it's doing. It's doing the nothings at the moment during the day, but you can see what's been happening. Wow, there was almost a trade there. Wasn't a trade, but almost a trade. You can see that the market is very, very undecided as to what oil is capable of doing at the moment, and I'd be lying if I said I haven't got a bearish outlook on it. And I think we discussed the reason for that yesterday. Yes, we've had an easing on one side of the equation, which is the supply chain, with the OPEC decision to reduce output. But we haven't had an increase in demand, and I have no idea where that's coming from or when it's coming. And I thought about this yesterday and really didn't say too much about it, but if China are stockpiling oil, where the hell are they putting it? Cruise ships would be a place, but there's no room on there. Where do they store oil? So or do they do forward contracts, Ash? I don't know. Did they just say, okay, we bought it at that price and you deliver it when we say? I don't know how it works. I've got absolutely no idea. That's why I say I don't trade oil, don't trade gold, because I don't have the knowledge around it. But my logic, or the way I work and tick and operate, is through logic, and logic tells me that there can't be an increase in demand right now. In fact, quite the reverse. Until the world starts to move again in terms of airplanes, in terms of people going to work in their own vehicles, ships moving, all of those sorts of things that are driving the demand for oil down, has to have, in my humble opinion, an adverse effect on the oil price. Maybe that balances itself, and maybe that's what we're seeing at the moment. Maybe the supply now being reduced matches the lack of demand. Who knows? I can't quite come to that equation properly, but I can't be a bull, is what I'm saying. And that confuses me a little bit. And if I put those two things together, the potential for oil to fall and therefore put pressure on the CAD, and the perceived strength in the yen yesterday versus where I think the yen should be, is really, really interesting. But I did note yesterday that we are in a CAD yen long trade, right? And we're bang on entry there at the moment, as you can see. We've been there for 1, 2, 3, 4, 5 days now, and that just bores the heck out of me. I hate it. But I do note with interest yesterday's bar, and yesterday's bar was incredibly telling, in my humble opinion, in that you can see that we've just been perched on top of the monthly pivot for the last 4 or 5 days since we broke that level. So we've been unable to come back below and sustain any pressure below the monthly pivot at this point, and price point 77 cents. So what I really see here is the potential for this to go long. And we've got a double bottom in place. We've got a higher low. We've got a higher high. Sorry, we've got a higher high. We've got a higher low. We've closed the gap. The one issue that there is that we haven't gone on and put in a second higher high, but we do have a second higher low. And if you've been following the way that I trade, I do love that candle, because I love to see a seller bar that in some instances can be construed to be a buyer bar. So if you were to drill down onto that, you will see that it's not a perfect double cross of the monthly pivot by any stretch, but it's kind of there. So if I'm not in this trade already, then I'm wanting to trade this further. So what I think, if you are in this trade and you should be just in profit at the moment, what I would consider doing is marking the open of that bar, which was 77.30. No, that's not right. The open of that bar was 77.80. Let's call it 77.80, which is about 14 pips from where we are now. What I would consider doing is taking profit at that point, if you are in this trade, and making yourself safe at that level, then entering a second position above the high of that bar. That's what I would consider doing. In fact, that is my position at the moment. So I'm going to get safe when we hit the open of this bar, and then I'm going to add a second entry long above the high of this bar. Same stop loss, exactly the same stop loss. So if you're not in this trade, I'm going on record as saying I like that candle and I will trade it. Main reason is because we've come back inside the range, which is my go, right? This is my caper. We've come back inside the range, and you can't really call it a higher low at the moment, but if it smells like a higher low and it looks like a higher low, it probably is a higher low. So that's what I'm looking at right now. Entry level for those of you who want to take the trade long is 77.85. And your stop loss should be around about the 76.93 mark. So 77.85 and 76.93 mark. Targets, you probably want to be taking profit here at the open of this bar, which was 76.88, I think. Yep, thereabouts. That should be your first take profit, and get a third off the table at that point. Your second take profit, you can be a bit more liberal with that one, but it doesn't probably need to go beyond there. That's around about the level that you'd want. Around, let's call it 80 the figure. And then you can let the rest run. If you get extremely fortunate, then look how far we've got to travel up here. And that's the basis of this trade. If you have a look at this on the weekly chart and you consider what we're trading on pound Aussie, which was a massive tweezer top on a weekly chart, well, we've got a massive tweezer bottom at a strategic level here on a weekly chart. Shouldn't need to say any more than that. So there are multiple reasons to be just that little bit bullish here. But again, you've got to equate it back, and this is why you can't go in at full risk. You've got to equate it back to the oil price, and you've got to equate it back to the perceived strength in the yen yesterday, which for whatever reason confounds me. But anyway, there you are. So that was a long way around that, but just keep your eye on it. I think that's an extreme possibility. Going back to explain the pounds and what we do for Brian, what we do with the pound when we start to trade on a 15-minute chart. As soon as we get triggered on the hourly, if it's triggered long, we cancel the short order. If we get triggered short, we cancel the long. And then we trade on 2 15-minute bars. And what that means is if we get triggered long, we're looking for 2 buyer bars in succession. Let's go back to yesterday. And we got entered, we didn't trade yesterday, but had we traded yesterday, we would have, am I on the 15? Yes, I am. We would have been triggered with this bar here from memory. I can't quite remember, but let's say it was. Let's say we got triggered with this bar here. Then we're looking, don't count the trigger bar or the one that takes you into the market, but you do count the next bar from there. So the first bar after your entry is a buyer bar. The second its open is lower than its close, right? That's a buyer bar. It's not necessarily a buyer bar, but that's the definition I'm using. Then you got a second buyer bar. So as soon as you see 2 of the buyer bars in a row on a 15-minute chart, you move your stop from where it was to underneath the low of the 2 buyer bars. Then if you get another one, you move it up to the low of the 2 buyer bars, which would be this one, and so on and so forth. And that one, that would have been your last opportunity because you then got only 1 buyer bar and then you got taken out with your trailing stop. So I hope that helps Brian explain exactly how we managed to do that. And I think that's all the questions that I have. So I'll just move on with potential trades. We all know about the pound. It's in really no man's land for me. There's no way I could trade long here. Don't need to because we're in the long, of course, because of a few reasons. One is I'm at daily resistance level 2 and I don't like to trade at or beyond there. The other is I've got an untested daily pivot here. Now, some would say the daily pivot was tested with the first bar of the day. I would contest that and say that the daily pivot came to price rather than price came to the daily pivot. So on that basis, I still consider that to be untested. Why is that important? Because of the high probability of price at some stage today. Wish I knew when. If you could give me the time that would happen every day, guys, gee whiz, we wouldn't have to want for anything, that's for sure. But the high probability is that the daily pivot will be tested at some stage. It might be next. It might be the last candle of the day in US session. Who knows? But to trade away from that at this point is not a good idea for me. So I won't be doing that. Dollar yen. Now, we should also be in dollar yen, you guys, from last week. We got in at this level here, and that seems to be going nicely. Would I like to trade it at the moment? Answer no. You can see again we've gone into consolidation. That's not necessarily a bad thing for me because if it lines up as a nice little range box, then I can trade it from the top to the bottom. At this point in time, I don't see that. Rather, I see even the potential for an ascending triangle here. I'll just put that on the chart if you can't see it. Okay, so when we see an ascending triangle, there is a strong possibility, not absolute certainty, that's for sure, that this will break to the high side. Ascending, break to the high side. Descending, break to the low side. It's not necessarily the case because really all you're doing is depicting a range here, the same as anything else. It's just telling you that price is going from the top to the bottom to the top to the bottom. So the breakout is uncertain as in terms of direction. It's certain that it will happen, but we don't know where. There will be people, and look, I'm a fan, I've got to say, they will break to the high side if they're ascending. I am a fan of that. And because we now have a good reason to think that the daily pivot will be tested, we know that. I'm a bull fan for a short period of time because I can see the potential for A, the triangle to break to the high side, B, for a daily pivot test, and probably C, we've got a bullish engulfing bar here. We've got a higher high, we've got a higher low, The equal highs obviously depict the triangle, but we're getting a series of high lows here now. So best case scenario for me would be to trade off one of those and target the daily pivot. So that's what I'll be seeking to do, but it's not there yet. That doesn't change my bias. My bias, medium term, even long term, is most definitely bearish this cross. And well, you can just about throw anything against the dollar at the moment, and I'll tell you I'm bearish on it because I think the dollar is in strife. And I don't see it getting out of that anytime soon. Euro dollar, somebody wanted me to have a look at euro dollar as well. Of course I will, because I always do. It is my go-to currency pair. What I see here is a bit of a mess, to be honest, but what I need to do when I see a mess is go out to the bigger picture, and the bigger picture will tell me a little bit about where I need to be thinking. And what I see here is obviously the big structure that we've got, and we're going from top to bottom, bottom to top. The latest move from bottom to top came off the top, as we expect, didn't go to the bottom, but what it has done, it's come back to the previous breakout level from here. So we broke short here, came back, couldn't hold it, broke short again, came back, couldn't hold it. This time, maybe we've held that level. Not saying we have, but it looks to me that this is a strong potential. Have we got any confluence here to suggest that that is indeed a thing? And the answer is really the only thing I've got is the daily pivot. Is that strong enough to suggest to me that this level is going to hold? And I can't answer that with any certainty, I've got to say. I see a mess. It's obviously a big pennant forming here, and we are coming to the point where, okay, it will give us an indication shortly as to which way it's going to go. If I'm absolutely frank, I'm thinking monthly pivot. But how we trade that, and even why we trade that when we're thinking it's going short, is probably beyond me. So the answer that I'm going to give is really not what you want to hear, I don't think. And I can't remember who asked the question. Raymond, maybe? I can't remember. The answer I'm giving is not what you want to hear, because it's indecisive as far as I'm concerned, and I can't really give you a strong case for either direction. I can give you a case, but I can't give you a strong case. If I look at that again, I'm seeing monthly pivot. Is that the best channel I've ever seen? No. Have we got a reason to think it'll bounce here? I guess we do, but it's anything from clear to me. Really is anything from clear. I think this will go either way easily. If I'm forced to say which way I think, if you've got a gun against my head, I'm going to say long, but I don't want to trade it. I've got to say, I've got to be honest. I don't want to trade it. Dollar Swiss is pretty much in the same boat here, in the middle of nowhere. You can see now that we've had a bit of a whipsawing price in the last, 2, 3 weeks, 4 weeks, let's call it month. And now we're still going up and down, but we're putting in lower highs and higher lows. So that's not a good recipe for trading it at this point in time. No real structure here for me to take any notice of. So answer's no. Dollar Kiwi, if I had a trade line coming through here, maybe I do on the 30-minute chart. Let's have a look at that. Yeah, okay. Yeah. Bit of a mess down here. We've been across the daily pivot and we've tested it, broken it, come back, tested it the other side, etc., etc. Now we're looking like this wanted to put in a false break, but it's since, and I'll explain that to you. The false break would be of this trend line here. So a false break obviously is a break that doesn't turn into a break, or it turns into a reversal in many occasions. The fact that we've now bounced long makes that a very, very difficult proposition. So whilst I would have been prepared to place an order underneath this bar, first profit at daily pivot, there's a few things here I don't like. And the fact is we've taken out the high of this bar. We're really just gone up and down on the daily pivot all day. It kind of negates the fact that we want to trade back to the daily pivot. So I think this is just not for me. It's just not for me. Simple as that. We've broken out and we've retested here. So that's the real thing that I'm seeing. I think this can go long, guys, but I'm not willing to trade that at this point. The hourly chart is still showing a false break, but my rules tell me that I have to have 2 candles either side of this swing before it becomes a swing, or a high, in fact, a swing high, if you want to call it that. And for that reason, I haven't got the right to put that trend line or trade line in the market. This is telling me still chance for a false break. So I'm seeing 2 signals. I'm seeing signals in both directions. So when I see that, I just bail out and say no thanks. So Ash, I think rather than go completely around the ground, I'll go to here and I'll kind of start to cry because I wanted so desperately to get back into this euro pound, and it looks like at this point that I've missed that. Maybe it's not the case, and I will get another opportunity, and the reason that I didn't want to take this short at this point will actually play out. So what I was seeing was the bottom of the range, potential to come back inside it and take on the high, and then even the monthly pivot. So a decent retracement before I got back short. It looks at this point as though I've missed that. And I really don't have any chance to get in short at this moment until we get back to a resistance level. So it's going to be a while, but that looks eerily as though I may have missed it. I'll quickly go to the Aussie pairs. And the reason for that is I'm such a bull on the Aussie at the moment that we need to have a good look at this and see if we can actually find a way back in. The answer for me on every pair, and I don't really need to go through the lot of them, is that I don't want to go long again yet. Because we've had 2 phases here, first phase, second phase, the obvious resistance level is kind of here where this gap is. And I don't want to trade into that right now. I also see the need for a second retracement, and I think that may well happen off this resistance area. Am I willing to trade that? No, because I am such a bull, the Aussie, and I think this can go against the grain, if you like. We've got a very good case off the bottom of this channel. We've got also a very good case for a pullback required. Maybe I'm a little bit light on where we need for that to happen. I'm saying there, but we don't have a lot of recent price history in that area, but we do have the gap. So I'm thinking maybe we're on a retrace day today. And if we were to do that and come back to the weekly pivot, then wild horses wouldn't hold me back on any one of these crosses. I don't care. You can name any currency pair, any currency against the Aussie at the moment, and I'm willing to trade it. But they're all exactly the same. They've all got to come back. Such is the nature of the Aussie at the moment. Everyone's grabbed hold of it, and we need those pullbacks. So, and I'll be disappointed if I don't get into these trades now. Of course, we're still in pound Aussie short, which is the same thing. We're still in euro Aussie short, which is the same thing. But we've banked fairly well on those. I now want to get some more money out of the Aussie, and any one of those will do on a buy the dip situation. But the dip now has to be a little bit more substantial than 30 or 40 pips back to the daily pivot. It's got to come back more than that for me. Righto, Ash. That's about it for me. No trades except for CAD yen if you're interested, but do bear in mind that you are taking on the oil situation, and you're also taking on that strong yen from yesterday. It's very interesting. Let me have a look at the 30-minute chart just to see if I can find anything there. Look, there is something there. And if you're super keen, there are worse entries than right here above this bar. But similar to what I've just described on, can't remember the pair now. Yes, I can. It's the Kiwi. You remember I said on the 30-minute chart that the high of this bar, which is the bar we wanted to trade, has been taken out substantially. That means that this area here is fertile ground for anybody who wants to loiter there. And exactly the same scenario I have on CAD yen, because if I were to use this candle as my entry, then my stop normally would go there, but that's been shattered and smashed like to smithereens. So if price comes back to here, there's no reason for it to stop at the bottom of my candle. That's the issue that we've got to play with. If we get another one of these, and look, these are things I call shots over the bow. When I see price come to a level, pull back off it, get back to it, pull back off it, get back to it, pull back off it, as this bar has done, I think that one of the next times that happens, we're going to smash through there. So if I see this happen again over here, so approach pullback, then I probably will place a long order on CAD yen on the 30-minute chart. But again, going back to what I said before, on the daily chart, there is a trade there already if you want to take that one. But that's it, mate, for now. That's all I really want to, all I really want to trade right now.
If you just pass me the screen real quick, I will just do a quick rundown for what we're
looking sorry, that took a whole lot longer than I anticipated.
That's okay, mate. No problem at all. Thank you very much. So FTSE is still managing to hold on here at the daily pivot. Really good point to trade from. And if you want to trade from here, the thing I would look for, I think, to trade this with a bit of safety, is to go to your 5-minute chart and think again about what you need to see. And what I'd want to see if I was going to trade this long at this particular stage is a bar that took out this high. Price action that took out that high, because this could continue to come to the downside. It's unlikely, but it could happen. But this would negate a lot of the risks. So if we get a bar which takes out that high, when price comes back to test this level again, then we can start thinking about a trade to the upside. So the price really that you're after would be something around about 58.26 on the futures, which is on the UK 100 will be about 58.50 or something like that. So it's going to be around about 58.50 on the UK 100. But draw the level on the UK 100 and look at your 5-minute chart. This will be the point that you can put your 5-minute chart on. And because you'll be expecting this breakout to be a higher low, then stops can be under the daily pivot. So you can have a 30 pip stop loss. And given the market condition and given the fact that we might actually be moving to the downside later on down the line, if that was to happen, a 30 pip stop loss there, then I would look to take just half off, if we get to this point, and you can make your trade, then you can make your trade fairly safe. Where you can make it completely safe and maybe you make some money out of it on the 5-minute chart. And then if price continues to move to the upside, then you can start moving stops on the next retracement and possibly add into the trade from there. This doesn't have to be 1%. This could be 0.5%, 1/3%. It doesn't matter. But I would still take half at this point. So the least you can put on is at 0.02 lots on this one. So you can take off 0.01 if it gets up to the 58.60 level, which on the UK 100, which will be around about 58.80. So that's what I'm looking at with that one. Now, the other trade that I'm really interested in is the Swissy yen. I think this is a really good pick by I think I'm pretty sure it was Chris yesterday, but I really like this one. It's struggling to get up to above that, so that daily pivot. I am looking at the 15 for entries on this one. And just seeing, what the price action needs to look like to get me interested, and it's probably something like this. I would have thought would be something like that. So as we're at this level here, what I'd want to see taken out with this one is I'd want to see a bar that closed below this point here. So not just yet, but if the bar closes below that point there, then what I'm after is something of a similar price to where we are now. So moving then back up again and trying to trade somewhere after, the first time round, let it go through it. But as it comes back, I'd want to see the price that we are probably pretty much currently at tested again. But if it gets back to 111.52, let's call it 111.52, then I would be interested in trading this one to the downside. So where we are now needs to get taken out and close below. On the return, I'd want to see 111.52, and then the sell order will go in the market if it closes below here. So I like this this Swissy yen. Technically speaking, now to the downside, I think it looks a lot better. It's not quite there yet because I want to see it take this this area out. Taking it here would have been fine. Evidently there's enough weakness there, and you are getting a better price, but this just gives us a bit more safety. If it is going to continue to the downside, it gives us more safety to know it's taken out this lower point here, and it's got to take out 111.47 at least. Take out the lower end of this, take that out, close down there on the 15. As it comes back again, then I'd want to go short. So that's what I'm looking at with that one, mate. I like that one quite a lot, actually. Swissy yen for some downside. FTSE 100, I would still consider the downside if things don't change to the upside. But right now, we are just waiting to see if it can break a 5-minute resistance point, and then see if we can trade that one long.
Right, mate. Happy days. Look, there's a ton of questions here. If we can take a few minutes to answer them,
yeah,
we will.
Sure.
Raymond, what I understand is the London breakout is a sure thing. No need to involve other indicators to confirm if indeed a breakdown is happening or a no-show. Question mark. Yes. There's no such thing as a sure thing. And the problem is with sure things, if there is such a thing as a sure thing, Raymond, is that we don't know what happens after we get triggered. We can have 100 reasons why the market should rally at that point. But the one reason that we don't see or happens just after we trigger it, maybe Trump tweets something just after we get triggered, it can change in a heartbeat. And therefore, our stop loss can be taken and we're out of business. Unfortunately, there is no such thing. So in terms of indicators, I don't use indicators, as you've probably seen. I only look at what price is doing in relation to the pivots and trend lines. That's it for me. So yes, there's a cave somewhere where there's a lot of oil. Good on you guys. Everyone has a barrel. Yep. Why not? Most of the world's out. Yes, agreed. We are in transport, lockdown, stockpiling all ships in their ports. Must have a lot of ships. And they do. Don't get me wrong, they do. That's true. I see them. In fact, when I come from Newcastle in New South Wales, which is the world's largest coal port. So I've seen 40 and 50 ships off the coast there at a time waiting to fill up with coal. So I know how many ships they've got. Don't worry. Each family keeps a barrel. Yep. No place to keep. Huge reduction in usage. Accidents in ports. Lots of ships. Yep. Caves with bats, Crystal. Okay. Mulu guano. I'm reading that as batshit, and I don't really know what it means. But guano, I know what guano is.
I think that's to referencing the COVID-19, isn't it?
Oh yes. All right. Okay, got it. I'm a bit slow sometimes. Ace. Any opportunities to trade the slingshot strategy these days? Mate, I'm in 6 positions at the moment. Most of them are related to the slingshot, and we hinted on this a little bit earlier. We're in such a volatile market at the moment, although it is tending to die down just a little bit on that front. It is very, very difficult to trade the slingshot on a 30-minute chart right now. And the reason is because we take profit so early on the slingshot strategy, on the 30-minute chart anyway, that really is fine if you've got a stop loss that we normally have. The problem with a volatile market is your stops have to broaden. You've really got to get your stops out of the way of the noise. We spoke about that a little bit earlier. And by doing that, in a volatile market, your stop loss is sometimes 2.5, maybe even 3 times where you would like it to be in terms of pips. So if I'm taking, for instance, a profit at 6 pips on a 15-minute candle, no drama. But if I'm taking a 6 pip profit on a 60 pip candle, that's drama, because I'm wasting my time. There's absolutely no point taking the profit. You're not gaining anything. You're not even getting safe at that point, because you've got to take 9/10 of your trade off to make yourself safe in the market when you've got a stop loss that broad or that wide. So for that reason, you're finding that there are very few opportunities in real terms on the 30-minute chart at the moment. But gee whiz, there's tons of them on the 4-hour and daily charts. So my advice would be concentrate on the bigger time frames at the moment, even weekly charts, because you can get your stops mean something in terms of your take profit level. For instance, if we have a look at some of the trades that we're in, I won't go through them at the moment. Maybe in the US session we can have a look at those. But Euro
there is a trade
Aussie
here, mate.
Sorry, mate.
Sorry, the trade here on the Swissy yen. That's
okay.
This is good to go. You know, I mean, put in. I'm going to work out my my lot size in a moment, but just to illustrate for you guys what I'll be doing here is I'll be putting in a pending order, a sell limit at the price 1150. 1.1111.50. Doesn't matter so much about that. Stop loss is going to be up just above this level here. Let's double check that. Yeah, that would be okay. Stop loss above the daily pivot will actually be okay. That would suffice. But let's put it up here out of the way. 1173, so 11173. So you can put that one. You can place that one in actually. To be there. And actually what I would do, just so we don't have to manage this, so that effectively they're the levels there. I'm going to delete this because of what I'm going to do is put 2 trades on, one to take profit at the low. So what I'd want to do here is get one of them safe. So if we've got a 23 pip stop loss, we can come down to the low somewhere down here and about 30 pip take profit area down there, and then just ride it out and see what happens from there on in. But I quite like this. I quite like this this Swiss yen, mate. I think it looks pretty good. So that is going to be the trade for you guys just before we leave, and then we'll talk about how we're going to manage that if we are still in it in the second half of the day. Okay, I'm just going to delete that one out though, and start again on that. But we'll do that. I'll do that in a minute when I come off air.
A bit of a Central Coast boy, Raymond, at some stage. My wife actually lived on the Central Coast, down near the Gosford area, definitely. And I know the area quite well. My word, I do. Played a bit of football down there, and yeah, all good. Go Helen. You catch on very, very quickly. I like it. SH1T indeed for the Bat Guano. You got it. Thank you. I think we're up to speed. I think we've got all questions answered. Lived in Wyong, even closer. Nice golf course there now.
All right.
So you don't need to add any more management, mate. That's all good. Everyone
That's all good. Yeah. I would just say, you know, the way I'll be managing it is to take half here, leaving the stop at break even, and then trading the stops down.
Righto, happy days. We will check in on that one in around about 4 hours and 20 minutes from now.
Good stuff.
When we start the pre-US session and then get into the US session, hopefully we've found a slingshot entry for you guys.
All right,
we'll see you then, eh?
Great stuff, mate. Yep. See you in a bit. See you guys at 2 o'clock this afternoon.
And we'll still come up with an exit strategy. Have a good one, guys. If you can't be with us later, have a good rest of Tuesday, and bye-bye for now.
You're welcome, Kumar. See you later, guys. See you, Helen.